Hello everyone, welcome. This is an NFP preview. Basically, we're gonna go through everything ahead of everything necessary for you, at least ahead of the NFP tomorrow. Trying to go through how it's likely the market to react based on any surprises or disappointment, and etc. So today is we're gonna focus mainly on the NFP preview, okay? So feel free as usual to ask anything you want. I'm here to help. I would like to make sure that I have the chat in front of me. Perfect. Anything you want regarding the week's trading, today's session, but also we're going to emphasize on the NFP, especially for people that trading the news. NFP is a very, very important and crucial, if you allow me, event of the most crucial, basically the most crucial event of the whole month, and is tradable by a lot of market participants around the world that their their strategies to trade the news because of the volatility that cause. And I'm referring to different types of strategies. Big players as well, or even retail traders, but that but the people that they follow the fundamentals, and they find out that their type of trading is the news trading the fundamentals, or even strategy providers for their clients, their followers, such as in the copy trading, copy trading, investment service that we provide. We have a lot of different type of strategy providers in HFM that they are more or less responsible to provide strategies to their followers. So feel free, obviously, to visit our website. You're gonna find out a lot of other products that we offer, but one that in which you can find what other traders are doing, and what other traders, which strategies they are following, is mainly the copy trading service. You can feel free to visit the website, and you will find a list with all our strategy providers and what kind of trading they are using. So it's quite enlightful. Have a look. Now, let's get back to our topic. Alex, I'm not quite sure about that. It's quite low, if I'm not mistaken, but I think that depends on your residential country. So, but it's not. I mean, it's quite low. Depends if you want to be a follower or a strategy provider. I mean, it depends on your experience in trading. So, yeah, this I'm gonna. You know what? I'm gonna, guys, stick the. If you check my description, I notice, Alex, that you have joined us via Facebook. In my description, I think I have put the link that redirects you to the copy trading website. Over there, we have all the terms and conditions, but depends. You need to choose whether you want to eventually become a follower of someone, of a strategy provider, or whether you want to be a strategy provider. So yeah, check that out. Everything is over there. There is a list of any requirements, but if you're referring to following someone with a good record, obviously, that I think that's there is the minimum deposit is very, very low, so you shouldn't worry about it. Have a look, and if you need any further assistance, don't hesitate to to ask me. So, hi, Emmanuel, as usual, joining us. Welcome. So, guys, what do you like to see today, by the way? Any particular assets? I'm sure that everyone would like to go through the dollar again, but I would like to do it in a bit, okay? In a bit. Right now, let's come through the dollar, okay? Um, and gold as well, yeah, for sure. But let's start with the dollar, just because this is the daily chart. Just to, in order to allow me a few minutes to go through what is expected today and what happened overnight and how that affected, obviously, the dollar. So as you can see, there is a clear. If I have to just focus on the April's actually 10th of April up to date trading. You can see that obviously there is the dollar has stuck between 105.30 territory and 106.30. So there is a range of around 100 pips, right? So that's quite logical if we consider also this cautiousness around the Fed outlook with with the strong data from US, ongoing actually strong data from the US, hot inflation, researching in the consumer confidence. And from the flip side, though, we also have the intervention from the Japanese authorities, also adding to this uncertainty, uncertainty and around the dollar. They are correlated, okay? So don't think that, okay, is Japan, it will affect the yen only. No, any intervention by any central bank, it should be with in a coordinated move by other central banks, but mainly the Fed. Okay, so any intervention process is a coordinated move, so a collaboration between the Bank of Japan and the Fed. Now, anyway, the even though overnight, as you already know, we had the FOMC press conference and rate decision, which was actually largely as expected in regards to the outcome, the higher for longer stance. So basically, the Fed is not changing anything. However, the markets were expected a more hawkish tone than what we actually see. We had seen Mr. Powell more or less to be a bit on the dovish side of the market. It seems that he wanted to not to add a lot of volatility into the dollar. So he actually proceeded with a statement that it was a bit less. It was actually significantly less hawkish than what the markets were actually pricing in. But the outcome is clear: higher for longer, unlikely to move. To change the policy next time. So now the odds for a single, only one rate cut this year, it's the central scenario that we have for the rest of the 2024. Even though it's just May, but but this is what actually has already been confirmed. Let's say only one possible rate cut is still in the cards, from the Fed. Officials believe that policy is sufficiently restrictive. So, that was also the reason why we have seen the dollar drifting. You can say, but Andrea, why we drifted? They pretty much say that stated that they will stay higher for longer. Yes, higher for longer. Indeed, that should support the dollar. True, high interest rates support the appreciate the help the currency to appreciate. Indeed, yes. But guys, don't forget that the markets are ahead of themselves. Okay, so all these, or the majority of all this, has already been priced in. But it's not only that, it's what I said initially. The markets were expecting a more hawkish tone. So seeing a less hawkish and even a dovish tone from the Fed and from the Fed Chair Powell and the officials, it was interpreted as a bit of a disappointment, let's say. However, we are just a day away from the NFP. So this drift of the dollar back down, as you can see, to the 3 weeks bottom is also ahead of the NFP, because NFP tomorrow is expected to provide an upside move. It's expected the risk is to the upside, so more jobs. So having this in mind, it seems that the market participants have positioned themselves at the lower territory of the dollar, ahead of a surprise to the upside for the NFP that could spike the dollar higher. So it's coordinated. Okay, one is the fact that the statement wasn't hawkish, adding pressure with this way to the dollar, even though for the rest of the 2024 we are on the higher for longer stance. But we are a day ahead of the NFP, so that's why the dollar has been kept to the low territory that it has been the last 3 weeks, because of the anticipation of an upwards move for NFP. What that's supposed to mean? It is expected that we're gonna see another solid data coming out from the US labor market. Now, so dollar, clearly you can see that it has rejected the rejected the 2000, the 106. Sorry, Amal, I don't understand where I don't understand. You have both Arabic in your comment and English. Show a better way. You don't like the white background. You prefer a black. Sorry, I don't get it. Pound, yen, gold, Aussie yen. Don't worry about it. And we're gonna go through all these. Emmanuel, S&P 500. Yes. Everything. Don't worry about it, guys. I'm on it. So let's finish with this, okay? Let's finish with this. Rejected the 103.30 territory, back to the bottom, back to a very, very important support level, a strong support level that it hasn't been broken for nearly a month now, okay? As you can see, it also represents my 138 Fibonacci expansion back on the down leg that we have seen in the beginning of April. Okay, a very strong level. This is something that I also inform you about in the previous live that we did together, right? Very, very strong support level with the dollar. It seems that for the time being, intraday seems that it's ready to come back down over here. There is further room to the downside, is ready to retest once again this level. The key, however, the key question that you should keep an eye on throughout the day and tomorrow as well is whether it will manage to break this territory and how sustainable this move is, because it might break it, but if we see that this was a limited move, okay, and there is no and there is no indication of a continuation to the downside, then that's what I said initially. You should be very careful because there is an upside risk to the NFP, and the bottom could be a buying the dip condition. So you need to be alert. Today, and of course, prepare yourself. Find your support and resistance levels, set some pending orders, stop loss levels, trigger levels, do all the homework necessary ahead of the NFP tomorrow. Also, guys, don't forget, tonight we have Apple release, but I'm gonna go through the Apple once we move on to the S&P 500 and the Dow Jones that Emmanuel asked for. So regarding the dollar, in a correction mode, still, however, 105.26 still seems to be a very strong support level. Okay, you can see that even though RSI is below 50, the slope is a bit flat. So it seems that there is not a strong bear. The bears are not clearly in control. While the intraday stochastic has already flattened, so it seems that that is not the necessary momentum to help the dollar break this 105.25, to be more precise, 105.25 level, and to move further to the downside. This looks to be like a limited move. We could see the dollar breaching this level and consolidating around it. So around it. So keep an eye on that. Overall, as I said, we are in a ranging market. This was clear. The asset is moving between 105.25 and 106.25 for 3 weeks now. Okay, so you need to be careful. I'm gonna zoom into the 1 hour chart. Okay, actually, basically, first of all, let's put a line at the top of the range. Okay, come on, Andria, at the top of the range, in order for me to measure and find the mid of this territory, which should be somewhere here, 50 points, 105.78. Okay, it's around the pivot. So here, okay, so I have what I have drawn here, guys. Okay, what I have drawn here. Come on. Let's put it with a different color so it won't confuse you. Thicker blue. Okay. Thicker and blue. Thicker and blue. So basically here I have drawn the range, the top, the bottom, okay, and the mid. Any indication of a crossing above the midline suggests a retest of 106.35 level. That's for day traders, okay? For short-term traders, guys, this is the 1 hour chart, or if you want, we could put even the 30-minute chart. You can see that in the very, very short time frame, such as the 30-minute chart, there is a bearish crossover here from our short-term moving averages. So it seems that there is still further steam to the downside. As I said, 105.25 is still an area that could be retested, considering that stochastic is still in the oversold territory without an indication yet for a pullback. If we see a bullish crossover here, then a rebound might be seen. Okay, so what you should the 30 minutes trader, 1 minute, 1 hour traders, and etc. should take care. You should, guys, keep an eye on the. Let me just here we are. On any obviously a bullish cross from our moving average, any bullish cross in the stochastic, along with a coordinated move rebound away from the 105.50 level, and more precisely, the latest high is at 105.65. This could bring the asset back to the mid of the range or even higher. Okay, now let's move on. S&P and yeah. So, Emmanuel, let's start with the Dow daily chart. Okay, Dow daily chart. In general, the reason why I put the daily chart is just to see where it's standing right now. Obviously, is well below its record highs, right? You can see that this is the record highs were at above 40,000 territory. This is Dow Jones. We had a correction, significant correction on this 1, 2, 3, 4, 5, 6, 7 months rally. This was the latest 7 months rally. We had a nice strong correction, which raised the concerns about a potential trend reversal. So overall, guys, all of you scalpers, intraday traders, day traders, you should have this area under your monitor list, okay? Because it's an area that it will confirm a trend reversal and the actually a clear downtrend for a long, long time. So we're still not there yet. We have seen the pullback down to the 38% of the 7 month up leg. We had a rebound, right? And the asset is still consolidating between the 38.2 and the 23.6 Fibonacci level. Okay, but it found a nice support level over here in April. I'm referring to the 30, let me be precise. That is the 37,800 territory, okay? And it's consolidating for a while, okay? But you can see that there is a consecutive lower highs and lower highs. If I just focus on the 4-hour chart, because that will help us a lot, okay? You can see that that looks to be, come on, like here we are, come on. And descending triangle with a flat bottom, okay? So, let me zoom in, you can see that it came back to the bottom, rebounded, breached the trend line by connecting the highs, and turned back down again, and is actually consolidating. So what we're seeing, the technical side of it, okay, is that the asset currently is neutral. Okay, RSI is at 50, MACD is into the negative area, but there is a detection, a continuous detection of the bearish bias. What that means, it means that intraday, in the short term, the bulls are in control, trying at least to push the stock market and Dow in this case back to its resistance level, which lies at 30. Let me be precise, somewhere here, 400 territory. Basically, put your line on, and you will be on top of the resistance levels. You will have your resistance level area drawn. So we have a pretty mixed. If we focus, we have a positive actually session. It's a mixed session this week. So far, it's a mixed session. So look at that. This is, if I have to, this is Monday. Slightly up in red on the 30th on Tuesday. Try to recover the losses. It didn't manage, quickly turned back down. So the week has been in red so far. So overall, there is still a bearish outlook. I'm afraid, there, Emmanuel, for the Dow. So your eyes should be on this resistance zone that could, over here, we could see another fresh lower high and a return back eventually into the bottom of April's bottom. Okay, so Dow basically is an index that is more correlated with heavy industrial sectors mainly. So I'm not quite sure how much it will be affected on the up due to the Apple release today. Something that will be significantly affected tonight is definitely Nasdaq and S&P 500. But yeah, Dow, it's positive so far today. However, overall the outlook, it's still bearish to neutral. If I had to clarify, so even if we breach this resistance level, a reversal back down is expected, at least from what we are taking from the momentum indicators over here in our technical analysis, and considering also um, and considering also that if indeed, considering that higher for longer interest rates is something that is hurting the corporate sector, and NFP, okay, if we indeed see strong NFP number tomorrow, it's something that will also could have a bearish a negative effect on the stocks. Okay, guys, so let's move on. What else about this? S&P 500. Yes, S&P 500 for sure. S&P 500. Come on. For anyone that, because I see that people still joining, don't worry if you have missed something anyway. The live is stored in YouTube, in Facebook, in LinkedIn, in Twitter, so you can take your cursor and go backwards and see what you have missed. How come I cannot find my Dow? Sorry for that, guys. Not Dow, the S&P 500. Some reason. I don't know what I have done, but it's not here. Okay. S&P 500. And I would like first to see my daily template. Okay, so I know I have 3 moving averages. So what about it is the 20, the 50, the 50, the 100, and 200. As you can see, the asset currently is between the 50 and the 100 exponentially. If I'm not mistaken, I have the exponential one over here. Yes. The exponential moving average. So this is the S&P 500. So another similar chart with the Dow. Try to recover losses. It didn't manage. It didn't manage to return some losses. However, today continues northwards, but still well below even the mid of this candle. So be very, very useful for any intraday traders if you if you basically measure this huge daily candle and find the middle line of it. Because the fifth, so I have found it is the mid of this candle is the 5068 level. So that's a key resistance level, because a closure tonight above that level could suggest the return back to the 5120 area. Okay. Okay. So put down two very important sub resistance levels. First of all, is the mid of this huge decline that we have seen on Tuesday. Okay, so 5068. A break of it could open the doors to 5120 level. Okay, to 5115 to be more precise, and to the 5143, which is the also the 61.8 Fibonacci level from the down leg that we have seen, since the mid of March. Now, what I wanted to add about the S&P 500, we're gonna go through the also the intraday setup, but have in mind that yields are responsible for these performances as well. We have seen the treasuries correcting significantly overnight and so far today. Sorry, guys, sorry. We have seen the treasury yields planked on the FOMC yesterday, and this is something that that affected also and added further pressure on the stock market as well. So treasury yields planked, and actually was significant plank, if I'm not mistaken, were down over double digits before actually we see some profit taking set in. That's why we have seen that. You see, that's why we have seen the U.S. indices climbing initially and then get back down where they started. It was that that boost initially and then profit taking set. That's why it came back down, and that's why we have seen initial gains and then closing in red. So, my dear friend, what's your take on the S&P 500 based on it's what I said also in um, for the Dow. Even if Mr. Powell tried to reassure the markets that we still have on the cards another rate cut, yes, but the fact that the rates are higher for longer is something that is hurting, as I mentioned, the corporate sector. Okay, that's why we have seen the market to the downside since the mid of March, along with the earnings that they were quite disappointing so far. Not as feared, but quite disappointing. So the decline is still on. The lower highs are still on. Okay, because the central scenario is that the rate cut has been postponed for the last quarter. If you allow me, it might be the last month of the year. So it is what it is. So from fundamental perspective, the stock should be under a significant pressure. But we still have a nice floor from a technical perspective, at least, okay? So let's put two here, the short-term one, Here we are, to be more precise. Here and here. Why put that? This is the latest swing low. So this is the latest swing low, which is the most immediate support level, 5,007. The very next one is also the 100 exponential moving average, so 4965 level. Only a move below the latter could open the doors down to to the 200 area, 200 day moving average. So basically the next support level, if and only if 5,000 level, or to be more precise, the 4965 breaks, it will be the 4800s up to 4770. 4770 up to 4800s is the next key support area, if and only if we see the asset pulling back down, breaking eventually the 4966 level. This is in the medium term. Intraday, so for the week, let's say, it's this US session, we are already into the US session for this session, and for tomorrow, okay, we have seen the a rebound, limited though, so allow me to put on the intraday setup. Sorry, we'll put the white one. Okay, here we are. Look at that. Try to recover, but it's a weak rebound. It seems that the bears are gaining the control as well over here. Is it indeed due to the Fed? Is it a preparation? Is it because of the Apple announcement tonight? Whatever the reason, quite small body candles over here, flatten moving averages, flatten RSI, a very, let me just hide Emmanuel's comment. Can you see that stochastics are, it's the slope is not so sharp. It's a bit more pointing to the right hand side, indicating that there is a lack of bias, further bias to the upside at least. And so some consolidation has been seen around the 50-50, so the 50-50 level. So keep an eye on, indeed, it's a sun up. We focus the intraday setup. It was a clear rebound. Okay, yes, indeed. So, but the momentum is weak. So keep your eyes open on any decisive breakout of the pivot point or any significant, strong, bullish candle breaking the latest high over here. Even though stochastic has already pushed down, is pointing down, RSI is 52, very weak. So consolidation is the intraday setup, my dear friend Emmanuel. Okay, anything else, let me know. Okay, guys, anything else, let me know. I'm gonna move on. So what's next? Let's see the questions. Yeah, by the way, regarding the Apple, we forgot about I wanted to clarify why Apple today is so significant. Okay, a few weeks ago, a week ago, I don't quite remember when was that, but we had seen Apple actually stating that it not suffered, but it had a pullback, a slowdown in its iPhone sales due to the Chinese economy, to a sluggish Chinese economy. That's why the attention today and all the attention is on tonight on the Apple's release, Apple earnings report release, because because it's one of the G7, right? one of the magnificent seven, obviously. And the fact that there are speculations that iPhone has been seen. They stated actually that iPhone sales were detected due to the sluggish Chinese economy. We're expecting to see whether there were gonna be a disappointing revenue number today. And that could, as you understand, it will significantly affect S&P 500 and Nasdaq in general, the tech sector tonight. So, sorry. So a reason of this, if you allow me, a reason of this rebound is also um, it's also the fact that the mega caps companies, the G7, Apple, Alphabet, Meta, Tesla, the Magnificent Seven in general, the mega caps, are climbing ahead of the Apple's results tonight, and that has as a consequence. So another factor that supported intraday this rebound to the S&P 500 and to the Nasdaq is also the anticipation of Apple's results today. So, in general, the markets today are expecting, regardless if the sales in China were down, expecting that Apple will not disappoint. Okay, there are a lot of speculations, rumors, headlines regarding the announcement of a payback tonight. Okay, why? Because Alphabet did the same, Meta did the same. So there is this optimism has been mainly driven, not, as I said, has been driven mainly by the speculation of a possible announcement of a payback from the iPhone maker. Okay, that's why the sales of the iPhone sales in China have been a bit ignored. So let's see whether indeed Apple will disappoint or not disappoint today, and whether they will confirm a payback or not. But this rebound is more or less because you see this huge down candle was because of the Fed signal a rate hike. That rate hikes are unlikely. But it also ruled out that they're gonna change they're gonna have a cut anytime soon. That's why we have it pushed down. So what explains this boost, as I said, is the anticipation of the NFP, obviously, but mainly of the Apple results tonight. Very, very, very important. What else, guys? What else regarding to them? So very, very keep your eyes open tonight. Now, my dear friend, let's move on. Pound, yen, and gold. Gold. I think I've explained a lot about the stocks, about the, what's that? Someone is spamming me. A lot about the stocks, about the Fed, about the dollar. So let's continue with the gold. Gold actually was is the biggest. I think it's the biggest loser so far today. Up. And on the US Open, we see that this decline extended further. Something that I mentioned in my morning update. If you are checking our articles, I did put that on, stating that it will return back to the 28. So congratulate me. Sorry. Sorry. I think if you are a gold follower, you should have seen this coming as well. So 2280, just a breath away from it. 2287 right now for gold. It seems that the safe haven, the bullion, the precious metal has lost some traction, has lost some its demand. There's less demand. That's indeed the case. Trading lower, as we can see. Despite the rebound that we have seen due to the after the Fed, it came back down as the markets actually adjusted rate outlooks for the US and Europe. So down 2280, a key support level for the gold, as far as I can see over here. Let me check. Actually, I haven't put on the earnings the calendar, but just so okay, it's quite reasonable, to be honest. Let's see the calendar. Let me double check what's going on around, because I haven't checked the news feed for a while. Just to see whether there is anything that I might have missed, other than the risk mood has improved, as you can see. Jobless claims. Where is that jobless claims? Come on. Jobless claims, 208,000. Still solid, continuous jobless claims higher. Missed expectations, but sorry, no, they revised lower. Okay, they revised lower. But initial jobless claims slightly to the upside. Very interesting. However, it still is a lean jobless claims that still points to an upward surprise for the NFP tomorrow. So, okay, very interesting. So now let's get back to the gold. Sorry, my bad. Let's get back to the gold, obviously. So 2280 still a key, just a breath away, very close to it, very important level to be closely monitored. But there is over here, I'm gonna actually connect the lows like I did in my morning up. Come on. In my morning briefing. If you check our analysis page, connecting the lows, there is extending it, because this will give us a nice area to closely monitor ahead of the NFP tomorrow, but also for tonight's session, because we've seen that it clearly rejected the top. Okay, clearly rejecting the top, pulling back, a sharp sell-off, significant sell-off, how you can see, to the gold. It seems that the risk mood has improved. That's why we've seen all these cash flows away from the gold. With the next level, support level to be breached, is the yesterday's bottom, 2280, 2274 level. But the gold expected to continue moving within this narrow descending triangle. In case that we see a break further to the downside outside, guys, the triangle, then next important, come on, Andrea, how you did all this? Okay. Then the next important support level, I'm afraid, is back down to March performance. So 2237 and even 2200s territory. So I'm gonna clear a bit this mess. For intraday, keep an eye on this descending triangle, okay? Descending triangle. Up, down, rebounded, up, down. So expected to continue within this squeezed narrow range. If and only if you see a significant breakout, either to the upside, outside the triangle, either to the downside, again, outside the triangle, then you should try to find your next resistance and support levels. In case of a move to the downside, a break outside the channel, wait for confirmation. And if indeed there is a sharp sell-off, the next support level is back down to the 2250 up to 2237 zone. But as I can see, the momentum is still negative. So yeah, that is an overall bearish outlook for gold in the medium term. It hasn't managed to extend above, RSI for example, hasn't managed to extend above 54 levels since the 18th of April, 17th of April. Okay, so for 2 weeks, more than 2 weeks now, we've seen more of a bearish, the bears mainly in control, unable, finding a ceiling at 2350 level. So that's the intraday and medium-term picture. Clear sell-off in this 1 hour chart. Let's see whether there is still further steam to the downside. Yes, there is. This is a 30 minutes chart, guys. Already breached and broken the first support of the day. Moving average are keep pointing further to the downside. Bearish cross in my stochastic, indicating that there is further room to the downside. That's why I mentioned the 2218, the 2274 level, and because there is an aggressive sell-off the whole day. But I have to emphasize, if I have to be more specific, there is another fresh sell-off the last 30 minutes. Okay, now pound yen. I've seen pound yen somewhere. Pound yen, one of the most volatile assets ever, as I keep saying and keep saying and keep saying. So dear junior line, down, 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 down. There is it's not oversold. It's not oversold. You see that is within my Bollinger, so that indicates this is the 30 minutes chart, by the way. So everything over here looks negative. Everything. Clearly, the moving average and the Bollingers are pointing further to the downside. The asset is not oversold. That means that there is still room further to the downside. MACD is negative and increasingly negative. You see, if I connect the histogram, you can see that it keeps rising to the downside, southwards. RSI the same. Stochastic the same. So yeah, it is what it is. So It looks like a nice rounding top, which is a bearish pattern with the neckline at 193 level, right? So next support level, now another 40 pips lower, 91, 92.47. Maybe an extension of Fibonacci extension could help at this level, could help over here. Basically, let me just, yeah, here we are. Yeah, correct. Okay. The immediate support levels for intraday traders, from a technical perspective, there is still further room to the downside according to our momentum indicators over here. So, bam, 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 bam. I'm gonna put some forward just out of curiosity. Sorry. Come on, put some shift over here. Actually, a shift to the was too much. Sorry for that. Just give me a second. Should be in line. It's too far away. Just a slight shift. I want a slight shift. Sorry for that. Playing a bit around. Sorry. Okay, +2. The reason why I'm doing that is because out of curiosity, I would like to see any cross in advance, to see any possible cross of the 5 above the um, above the 9, just to catch that it will be a reversal to the upside. But for the time being, everything is pointing to further room to the downside, a clear bearish outlook intraday. Let's check the overall outlook. Overall, however, pound yen is positive. A significant pullback, reverting all the gains, nearly all the gains that we have seen in April. So, just something to add on your watch list next week, guys. Keep an eye on the daily picture, because the asset has reverted nearly all the gains that we have seen in April. It's back to the 2 months range and very close to the 20-day moving average. So it seems that there is some that's raising the questions regarding a return back down. That's obviously due to the intervention that could help the yen to return, to help the yen again against US dollar and pound as well, for sure, and any across every single other asset, for sure. Aussie yen, Aussie yen. It should be very, very similar. I want to cover a bit before I call it a day. I would like to cover a bit in the intervention, the Japan intervention, in order for you to be aware, fully aware of what's going on around here. But yeah, significant pullbacks, 3 days in a row, my dear Collings. Still failing to break the 20-day moving average, but that was a significant bearish candle. But what is like bothering me is the tails. So you see the tails are quite, the length of both the up tail and the lower tails quite similar. So it looks like there is an indecision, okay? Still the asset is above the years, it's at years highs, okay? It's at years highs. So positive overall picture, okay? Increasing momentum. RSI holding above 50, barely, but still holding. There was not an indication of a cross below it. The asset still above the golden cross, as we call it, the 61.8 Fibonacci level and the 20-day moving average. So basically, the fact that it's above the 100 zone is very important, okay? It's very important because this is a very strong support level overall in the long term and the medium term for the Aussie. So, any further intervention from yen, obviously, it will lead further to the downside with the asset turning down to below 100, reverting this the year's highs, the year's rally. But similar to pound, even though there is further room to the downside, that's only on the intraday basics. The 100 zone is still on, it hasn't been broken. So only a break of the 100 zone could open the doors to a long-term downtrend. Now, intraday, similar with pound. Further stem doing downside, increasing ongoing bearish bias. The rounding top over here hasn't been confirmed, but it seems that for the day there is further room to the downside. And also, guys, okay, basically, let's get back to the dollar again, because I would like to discuss a bit about the Japanese intervention. You need to understand what are all this, why all this happening, what's going on. Is it an intervention? Is it not an intervention? Indeed, in this, it is an intervention. When you have 100 pips move in few minutes. So if you have such a huge, that was an intervention. That was a clear intervention, because if I measure this move, this is 460 pips move. This was an intervention from the Bank of Japan, secretly, without confirming it, but it was indeed an intervention. So this one as well. So on the 29th of April and the 1st of April, indeed, we had intervention, secret ones. This is what it looks like to be the case, because they never came out to confirm it, as I mentioned. But how you can tell? Because you have more than 100 pips move in seconds, in minutes, okay? So if you have, like, if I put the 1 minute chart, okay, 1 minute chart, just to show you what we mean when you can understand that it is an intervention or is not an intervention. Come on, go back. Come on. Okay, you see, it's every minute. Can I zoom in? Let me delete this indicator just to see the full. So look, this is a minute chart, okay? Look that in 7 minutes we had 133 pips decline. This is a clear intervention. 2 minutes up, and then for the rest 30 minutes, we had 344 pips decline. This is an intervention. Okay, this is an intervention. What happened yesterday is not an intervention. Okay, it's not an intervention. This is not an intervention. An intervention is when you have in few minutes more than 100 pips move. This is an intervention. Why they are not coming out and confirm it? Afraid of market reaction, whatever the reason, you need to understand that you can spot an intervention by just checking, okay, by just checking the Bank of Japan accounts. So if you check, they are publicly, they are putting these reports on their website. So today there was an intervention of 3.5 trillion yen. Okay, that's why we have seen these moves. Okay, zoom out. Come on, Andrea, come on. That's why we have seen this. So yesterday, that was the 3.5 trillion yen intervention yesterday. And that is why we've seen this sharp sell-off down to 153 territory. It was 400, let me be precise, 450 pips decline. Is because there was another intervention from the Bank of Japan up to 3.5 trillion yen. That is interpreted to, if I'm not mistaken, $22 million. Okay, so they intervene, but they haven't really confirmed it out there publicly. But you can spot an intervention by checking their report in the Bank of Japan website, okay? The Bank of the Japan website. And you can spot these kind of interventions. There are two ways to do it, okay? Either by, as I said, checking their report, okay? To see their efforts, this intervention report publicly available, or by checking your chart, measuring your candles. So this is the second way to confirm whether it's an intervention or not. They don't. The best scenario is that they don't want to spook the market participants, and that's why they don't confirm something like that. But yeah, so it's one way. It's the monthly report, the intervention report. Okay, so they intervene twice so far. So that's why the yen has found this support against the dollar. And that's why the intervention is doable. Always have in mind that always an intervention is doable. Okay, it's doable if it's coordinated. So it is in coordination with the Fed. But as I said, they don't possibly they don't want to spook the markets. That's why they don't confirm it. But it is a coordinated intervention with the rest of the major central banks. None of the central banks has confirmed it. If you notice. But yeah, that's the way. Also, something that you should also have in mind is obviously the US yields. The fact that they fell is also something. It's something that confirms that indeed that was an intervention twice so far this year, 29th of April and yesterday. Um, yeah. So, what else I want you to know about the intervention? Very, very important. Let's see some technicals to keep your eyes open on the. Sorry for that. Just on the 156. Actually, to this latest today's highs. Okay. 157, let's round it up, 167, but more precisely should be 150, 156.25 level. Okay, keep an eye on that because it used to be a support for 2 days in a row. Now is the peak of the day, so a very significant resistance level. Okay, and to the downside, something that will it's a significant floor. Okay, it is the, let me just, 154 feet, 154 level, 150, round 154. Let me just put that. I think in the 4-hour chart that would be much easier for you to see. Here we are. Actually, to be more precise, the 154.50 was the ideal one, but okay, latest low. Yeah, okay. So these two levels are very, very important. Okay, very important. Everything smells like an intervention. It is an intervention, even though Bank of Japan hasn't confirmed it. The very first time was here, and the very next time was here. Okay, so from a technical perspective, any attempt to get back to 160 level will lead to a correction. The Bank of Japan will not, and has, as you have already seen, for 1, 2, 3, 4 days in a row, the Bank of Japan will not allow the yen to move above the 160. Any move up to 151 or 160 will lead to another sell-off. Okay. Also, it is an intervention, so take care of a breakout, significant closure, strong closure today or within the week. Okay, below the 144, and more precisely the April's bottom 153.50. Okay, a very important trigger level to be closely monitored. Don't forget that back in 2022, I think they intervened 3-4 times. Okay, and now it's just few days intervene twice without saying. So everything smells like an intervention. It is an intervention. It has been seen in their monthly report. So keep an eye on some very important support levels because they could be trigger levels for a confirmed down trend that which has not been confirmed yet, a long-term downtrend. For now, we've seen a fluctuations, ups and downs, but a significant break of 153.50 will open the doors to a long downtrend for the dollar yen. But officially, 160 is a level that you will see sell off again and again and again. What else? Any questions regarding the Any questions regarding the Japanese intervention, guys? Any help that you want uh, from me regarding the Japanese yen? So it is finally happening. This is what you should remember. And as we move forward, we will see it again and again. So, euro dollar for the very last one for Emma. I cannot see my screen. Where's my euro dollar? Here we are. Sell off. I'm guessing it's the yeah. That's the where the data. Obviously the data along with. Sorry, I'm running out of steam. Okay. So euro dollar to the downside, dollar gaining some ground. Despite the jobless claims. So dollar is gaining some ground against the euro. We have other than that over here. Sorry. So, if there is anything else that I'm missing out over here. Yeah, dollar has found some ground, still at the pivot point that explains the euro dollar decline over here. So okay, the latest data help a bit the dollar, but there is further room to the downside for the euro dollar. Next support is the 106.69 level, and the support of the day at 106.60 level. Productivity seems that it has helped a bit the dollar as far as I can see. Yeah, it's mainly dollar support rather than a euro decline. But anyway, that was the case as we explained earlier in general ahead of the NFP. So let's wait and see. Still, this is a key resistance area intraday. There is indeed some boost, but for the time being, it doesn't seem to be a strong one. There are no further important data other than the factory orders in few minutes. Okay, other than the factory orders. So if you're an intraday trader, Emma, keep in mind everything that I mentioned earlier. Sorry, that's the dollar. Let's get back to the euro. You asked about euro, my bad. So 106.69, 106.60 level, the very next support levels after this sell-off, with intraday looking that bears are in control, so there is further steam to the downside. So these are the very next support levels for you to closely monitor. Sorry. So well, that's pretty much it. So that's pretty much it. Question: if it bridges this area, question is whether it seems that it will bridge those support levels and like pause this decline, unless if we have any headlines coming up significant. But yeah, there is no steam to break this latest swing and move further to the downside. So for the time being, this is just the zone, the support zone, which is it could be retested, but there it doesn't seem that there is enough steam to break that level. Okay, so keep an eye on that. Obviously, if it managed for any reason, something might be announced or something, but if for any reason managed to break that level, keep an eye on the 106 level, round number, second support of the day, and April's bottom as well. Guys, I'm gonna call it a day. They've been more than an hour live. I can see that there are no further questions. Please, please, please. I tried to explain as much as I could what is expected for tomorrow's NFP, why we have an intervention from the Bank of Japan, even if they don't want to confirm it. Gold is under pressure, significant pressure, as we explained. So keep an eye on the 2280 level. It's in a descending triangle. That could, if a break on the 2280 could open the doors to further to actually the support, the clear support is 2274. So a break of that could open the doors to even February's bottom, but we still need to wait for the NFP in order to suggest that we're gonna have such a sharp sell-off down to the February's bottom. Gold under pressure. Dollar rebounded slightly, but is at the bottom of 3 weeks range. Stocks as we have seen are mixed, but mainly into a bearish outlook ahead of Apple today, and in general very important releases the Apple today. What else? And that's pretty much it. So I'm gonna call it a day. Anything you need, we're here to help. We're gonna have another NFP live tomorrow with my colleague Francois. Okay, so subscribe in our YouTube channel in order to get alert once Francois is live. Don't forget to visit our website if you are interested in becoming a strategy provider and having followers, or if you are keen to become a follower of a successful strategy provider, and to learn from them, discuss with them, because there is also you can learn from others, especially experienced trader, and this might benefit you further. So if you're interested in finding out more details about copy trading, don't hesitate to visit the website. There is the link in my YouTube, Facebook's description, LinkedIn description, and etc. Feel free to have a look. Thank you very much. Have a great day ahead. Take care, and see you again tomorrow with Francois, and next week with me and Mihalis. Thank you. Bye-bye. Enjoy.